everyone, and welcome to the Traders Talk, which we have once every month. My name is Gil Paz. I am the host of this talk, and today I have one of the here, Benjamin. Benjamin, how are you doing?
Hey everyone, I'm good, and you?
I'm good too. Your last name is Vornique, right?
Yeah, exactly, Vornique, yeah.
Vornique. So I'm really excited because really I do trading for, I'm full-time trader since 2012, but I do Forex, I do commodities, and I'm not really an expert on cryptos, I must say. So I'm really eager to learn, more about cryptos and of course, more about you. Now, to all the viewers that we have here, also on Instagram and also on our channel, please feel free to ask questions. We will get them, try to answer them. Those who are on Instagram, you are also welcome to go to the bio of the channel, click there, and you can sign up for a member area. It's absolutely free, and you have there 3 different channels where you have trading on 8 hours every single day. So feel free to join us there as well. With no further ado, we are a little bit late, so let's immediately start. And Benjamin, the first question that I have to you is, how did you come trading? What did you do before trading? And how did you start trading? How your story begin?
Yeah, so basically I do have like an engineering background. I graduated maybe 14 years ago, 13 years ago, something like that. First, I worked as an energy engineer. Okay, so
Oh, wow.
nothing to do with finance. Even my major in engineering was environment and innovating engineering. Okay, so I worked a few years as an energy engineer, doing some energy audits. And I started to basically trade on myself. Okay, I had an account. I discovered how it worked by myself. I knew about it for a long time, but I never traded at the time. And I've tried it for maybe 2 years, something like that, when I had an opportunity to go full time. The idea was that my previous job as an energy engineer, they ended the entire section, all the section at the company I was working for. And I was already trading for, let's say, 2 years at the time. I discovered crypto actually because of AMD. So AMD is a stock very similar to NVIDIA or Intel, let's say. They do processors and graphic cards.
Yes.
So I've always been a gamer at heart. I've played a lot in my life, various games, various platforms, and I always knew that NVIDIA and AMD both were be valuable for because of what they create, essentially, let's say the graphic cards. And I've discovered crypto through that, because I discovered that with the graphic card from AMD, you can mine. So at the time, I learned that you can mine Ethereum, but you can mine a lot of crypto, really. And this is how I discovered all the ecosystem of Ethereum and crypto and everything back in 2017.
Okay, so I want to get it back, because you mentioned here a lot of things I want also personally to understand, but also for the viewers. So you said
Sure.
you were an engineer, environmental engineer, and you started with cryptos, right? And it's
so my first investment was AMD.
It was AMD. And
So
you invested in AMD because you were a gamer and you knew AMD as good graphic cards.
Exactly. So at the time in 2017, AMD stocks was about $2 to $4 or something like that. I knew that they had in their research team a new product which was called Ryzen, which would hit the market in a few months or I don't remember exactly the timeline, but soon. And remember that I thought this product would be on par with Nvidia's product, and at the time Nvidia was alone on the market, which is a very big market. So this is why I bought AMD about in it was in, I would say, 2015, something like that.
Wow.
Back then it was like $2 to $4, and I sold AMD back in 2017 for 20 something dollar, 24 or something like that. So for myself, it was an awesome trade. And now AMD proceeded to go to something like $200 by now.
Yes.
Or something. So
So you could have 10 times more. That was my follow-up question. Do you still own an AMD?
no, I don't own it anymore. I've made an awesome trade. I've made like basically about a 10x or maybe 8x my money at the time. So really good trade. I thought that I was a genius at the time, really, to sell over there, and then if I had waited like, I don't know, 6-7 years, it would have 10x again. So really, yeah. I mean, it was a good trade. Could have been a better one.
That's most of the time. I think with all those trades, we are selling often way too early. But it's easy to say in hindsight, right?
Of course. Yeah, in insight, of course. But I mean, at the time, it was a very good trade, and I learned about crypto from AMD. So still, it was like an even bigger trade for myself. And the money I've made from AMD at the time, I basically switched it to crypto.
Okay, so
Yeah.
you learned. I just want to understand. So you invested in AMD because you saw there an opportunity. You had some, let's call it not insider know-how, but because you were a gamer, you understood that there is a good opportunity. You profited from it, and then what did you say before you started to?
Yeah, exactly. So I saw the potential in AMD. This is why I invested at the time. And then this is how I learned about trading, basically. I learned about how you can understand the charts, about the candles, about the patterns, about everything really at the time, which I didn't know. I knew you can just like invest and basically hope for the best because of like fundamental analysis at the time, but I wasn't aware about any technical analysis. But this is when I discovered everything and learned about all the market at the time, and I also discovered crypto. So mainly Bitcoin and Ethereum at first, but then all the other altcoins and the crypto markets. Exactly because of this, because some graphic like AMD graphic cards were used to mine Ethereum and other proof of work coins.
Okay, so I just want to go back to 2017. I remember 2017 was the real first, I don't know if you like the word, but the first bubble that was created in crypto. I think it went from like in 1 year from 800 to 20,000 Bitcoin.
Yeah.
And so you heard from mining. How do you hear from mining? And what did you do? There weren't so many coins at the time. Okay, there were already also a couple of hundreds, if I remember right, but
Yeah.
not a couple of thousands.
Yeah, exactly. Right now, it's millions of coins, really. There's
Yes.
so many coins created every day, so it's very different environment. At the time, there was already like a few thousand, but really a few hundred you can trade and everyone knew about. Myself, I discovered by mid 2017 crypto, but at the time I had just like learned about it, discovered it. And to be fair, I know this is not like maybe common for crypto, but I joined it because I thought like the idea and the idea of crypto and the ethos behind it, which is like a sort of crypto like cypherpunk, the idea that you could have like an alternative finance world which could be decentralized, which has like some value, etc. I thought like the overall idea of Bitcoin and then Ethereum also was like revolutionary to me, like very crazy. And I joined crypto at the time because I thought like technological potential here is maybe not infinite, but very, very large. And not because I wanted to make money. I mean, of course, I traded it and I learned all about crypto. And the idea is, of course, to make money made on it. But I really focused and choose to be in. I mean, I've been in crypto since then. So for the past, let's say, 8 years, because I kind of believe that this is a very new technology which can change the world for the better.
Okay. So, and you mentioned that you started mining because you had an AMD graphic card. So, but mining, you can't mine. No, you can actually mine also Bitcoin. Did you start mining Bitcoin?
No, I didn't start mining Bitcoin because basically, to mine Bitcoin, you have to own some sort of. So it's not really graphic cards; it's some sort of device which is close to a graphic card, but not really one. So I didn't start with Bitcoin because I couldn't, but I started with Ethereum just to learn the basics basically. And you can mine. I don't know, at the time you were able to mine Ethereum with graphic card. Right now it's not the same anymore. They changed the algorithm since then, so there is sort of evolution there. But at the time, we could just mine with Ethereum, and I started to mine with my computer. I didn't really made a lot of money by mining because I didn't have a huge setup at the time, but I learned how to do it. I learned the process. I learned this helped me to understand how crypto works, basically.
Okay. So you start with Ethereum. You bought also some Bitcoin or
Yeah. Already, I always owned some Bitcoin. I bought some Ethereum, and then I discovered a lot of altcoins, which at the time sounded so interesting. And now they are not all, but most of them, they are abandoned, or some new tech has come, or there is a lot of evolution in crypto. But yeah, the main crypto I really interacted with was Ethereum, basically.
And at the time you were, how would you define yourself? More as an investor who believed in the technology, or more or already a trader that looked at technical analysis and you bought and sold every day? How did you do then?
No, I wasn't a trader back then. So back then I was really an investor. I was an investor from AMD, and I discovered crypto, and I believed that crypto could be a very interesting new technology. But at the time, I didn't trade it. I moved some of my fund that I that I've won from AMD. Basically, I switched to crypto, but I didn't trade it actively. Not on 2017 nor early 2018. I really started to trade and learn about everything trading related back in 2018.
Amazing. So I imagine you started trading because Bitcoin and cryptos peaked in 2017, and then they started to fall drastically.
Yeah, exactly. I wanted to understand. So I knew that I was kind of let's say sure that the technology here is something that has value, but I wasn't aware of how the price could move, and all the, let's say, the crowd behavior that are involved within bubbles and within very, very parabolic moves. And basically, I learned it in 2018, like a lot of investors, because the price went against myself, and I didn't understand. And then I wanted to know more about it, and then I learned about trading, but not especially trading on crypto, like all the markets and the market psychology and the cycles and everything. I've learned it in 2018. Yeah.
Okay. So 2000, I just also for the viewers want to say, I think it was in November when Bitcoin peaked, November 2017. I remember very good. You know, for me, I was a trader since 2012. I followed the crypto world, but I never felt that I'm an expert. I even don't feel today that I'm an expert in crypto. Um, and then in 2017, I saw all these new traders coming in, and I said, wow, this is crazy. It went like in 1 year from 800 to 20,000. It was really, really crazy. And I was invited to talk at a trader conference in Germany. And everybody talked just about crypto. And I said, this is a huge bubble. And then in November, they launched the first future on Bitcoin.
Yeah, exactly. So it was 17 or 18 by December. So very close. But yeah,
Yes.
the peak was to the day the CME launch. So CME, they launched basically futures for Bitcoin. And at the time, there was like massive FOMO for everyone. Everyone thought that it would be like the future and everything. And the bubble peaked exactly to the day on the CME launch.
It's really, I remember this so good. And then, yeah, everybody said from now on, institutional will enter the market. It's not anymore a market only of retail trader. Institutional will come in, and this will be a huge boom. And then it went from roughly 20,000 to 3,500.
Exactly. And in insights, now that I know more about the market, the fact that the bubble peaked to the day on the launch of this product, which was so hyped, is logical to me. At the time, I didn't understand. I thought that it would indeed bring all the institution, etc. Which I mean, it was a massive like step for crypto. Like it got institutionalized, but doesn't translate to the price going up. And at the time, I didn't understand this, and now it's like so obvious that this kind of event would top the market. So yeah, now I find it very fun.
Yeah, but you know, I don't blame you, because when you are in a bubble, there is always narratives that sound very, very logical. And only in hindsight you see, oh wow, this was crazy. How could I believe that, right? That it will continue in a straight line up. I feel a little bit this could be the case in silver now. You know, it goes up and up and up, and people are explaining why it's going up, and it's so logical. There are so good arguments about it. You need it in batteries and in solar cells, and it's real demand, and it's not just a bubble. And eventually, again,
I mean, just on looking on the technicals and not even looking at fundamentals. When you look at gold and silver chart, basically they are vertical. If you go like higher time frames, like let's say higher than 3 days or something, it's literally vertical on the chart. So
yeah,
you already know that a chart like that is not, it can't continue forever like this. So doesn't mean that the macro top, like for like the multi-years macro top, is already there, but it means that because we are so extended, volatility will increase, and we will have like some pretty sizable correction, which at some point will be the macro top. But when you are on the monthly, and the monthly is literally like a huge vertical green candle and no wicks to the downside, nothing. It's exactly where we are starting to have like if you're sure you are in the bubble, is it like the end of or not? It's when you should start to look at like big events or big news that could hit the market. Usually, yeah.
absolutely. Now, let's go back to 2018. So markets started to fall after the peak 20,000. And what do? You get in panic? What? Or you continue to learn? How did you evolve from there? Because I assume you started to make losses suddenly.
Exactly. Yeah. In 2018, I've made losses, which of course were not as bad as the like the gains I've made for AMD plus script plus like the end of the bubble in 2017, but they were pretty sizable. So at the time I've learned about losses, about the fact that you could hedge but I didn't know how. I didn't even know you could short at the time. This is early 2018, and then I learned you could short, and then of course I thought that yeah, okay, maybe like it's there is so many panic and fear, I should just short, and then it's not that easy because it's just very volatile at the time. So I got kicked out on both my longs, both my shorts, and I've learned that yeah, at the end of a bubble, it gets very volatile, and then finally it takes time, and after the time comes, people they leave the industry because most of the people they don't believe in the really in the technology, and they were there because there were volatility, because there were like a strong uptrend with very with higher highs, higher lows, very you can see it, it's very clean. But not when the market is not trending anymore, most of the people, not most, but a lot of people, they are leaving. And at the time, I didn't want to leave because, as I said before, I entered crypto. I discovered it through AMD, but I entered it because I really believed like something could come out of crypto, really. So I wanted to learn more about the market, how to trade it, how to like be more prepared in the years after, because I expected crypto to come back, even if in 2018 when we had like a very very bad year for Bitcoin, because as you said, it went from 20K to 3.5. I was sure that it would basically come back at some point, not necessarily to the highs, but that we would have like a sort of at least rally, because at the time I discovered all the cycles and everything about Bitcoin, and I expected that it's just like cyclical and would come back. So I learned more about crypto, more about cycles, and I've learned various trading methods. Okay, I started at the beginning with just moving averages, which for me is kind of just let's say logical. I mean, it's just math and like a mean of of numbers. So really, it's not that crazy. But then I've learned about Wyckoff and the fact that Bitcoin is really, really loving this kind of cycle. So there is like accumulation, then there is an uptrend, distribution, then the downtrend, etc., etc. And Bitcoin is a very, very good asset to understand the basics of Wyckoff and of distribution and how you can spot accumulation, how you can look at volume. So really, I understood all of this. I understood like price action, which now is probably my main trading tool, I would say. I always start by price action, and I try to find like confluence of other methods into areas which are for me strong areas of either resistance or support. And yeah, and I've tried since then a lot of other methods, even Ishimoku, even like Elliott Wave. I really tried several methods in order to find the one that best suit me. And finally, I understood at the end that they basically all come from the same price action, but the overall ideas are similar. I mean, for example, on Elliott wave, some people they call a pattern an ending diagonal, but it's a rising wedge in just another way of analyzing it. And then you understand that all of those methods they basically look at the same things, just they call it differently. They see it through another lens, but at the end, but when you've looked at chart for 100,000 of hours, you get the overall idea from all the methods and how they basically combine by themselves.
Okay, so you 2018 market start to drop. You start to learn technical analysis. You learn about moving averages, Wyckoff, Elliott waves, and I assume you start to develop your own trading strategy. Do you trade only Bitcoin, Ethereum, or do you trade across the board many cryptos?
So I do trade many cryptos. I have so I don't have like the same like I do invest on some cryptos, okay, some altcoin which I believe or have a nice narrative and will come at some point. I try to sometime accumulate them when I think there is like a sort of accumulation range within the law, but I don't really time it. It's not like trading. And then for Bitcoin and Ethereum and maybe Solana right now, I trade it more actively. So I really try to understand where I expect them all of those charts to be within the next few weeks, few months, and I try to swing trade all of them basically.
Okay, so you're not a day trader, you're a swing trader. You hold positions for how long?
Yeah, I'm more of a swing trader. I rarely day trade, to be honest. Sometimes when there is a lot of volatility, I do it, but usually it's more of a swing trade. And I would say that I usually hold it for a few weeks to few months sometimes. So let's say 2 weeks to 3 months, depending on where I am. So for example, here on Bitcoin, we are right now at basically 93. We had like a big correction to 85 back in like end of November, December-ish.
Mm-hmm.
And from them, I expected a retest of about 100, maybe 104. I maybe still expect it. So yeah, basically I entered a bit lower and I stayed in the position for, I don't know, like it's been maybe 6 weeks, 8 weeks, something like that. So I don't mind staying in position for a few weeks until I'm basically wrong or if it's targets really. So this is a trade, and I'm in until I'm wrong on something, or if I see like if I see something changing, like on the fundamental, uh, like really something changing. But if not, I'm staying in the trade, and sometimes it can last several weeks.
Okay. So I want to ask you, when looking at Bitcoin, I mean, in recent years, many said Bitcoin is the new gold and Ethereum is the oil. I don't know if you heard this expression.
Yeah.
Um, do you agree? And how do you explain that last year gold went like crazy and Bitcoin actually had a bad performance?
Yeah. So for Bitcoin first, Bitcoin has always found various narratives that can change over time. So back in 2017, it was a new, like let's say a new contender for finance. Okay, like something that
Mm-hmm.
will change finance forever. And then back in 2021, it was hedged against inflation or debasement because most of the central banks then printed so much out of COVID, then suddenly people they sort of have the distrust into governments and how central banks policies were basically.
Mm-hmm.
And right now there is maybe a sort of switch that Bitcoin could be a sort of digital gold. And I think there is a value in this because the idea that Bitcoin is the most known money or let's say asset for people which are internet native, people were on internet for the past decade or 2 decades for some people. They all know about Bitcoin, and now it's starting to get entangled into a lot of things within internet. And some of those, like a lot of people, really not the most, but a lot of people, they know crypto, they know how to buy crypto because they are on their phone or their computer or whatever, and they don't really know it how to do it on stocks or even for gold. So most of like some of those people, they want sometimes something to buy uh, just to protect their money from inflation or debasement or money debasement or something, but they are not really um, traders or investors. They don't know how to buy gold, or it's not as easy. And some people, they go into Bitcoin for that. And Bitcoin has been a very, very, very good follower of liquidity in all the markets. So when you do have like an increase in M2, when you have like an increase in liquidity from basically central banks easing all over the world, Bitcoin has been very, very correlated with this those move from liquidity.
So
Yeah.
there is a correlation, you say, of easy money and Bitcoin going up, right?
Yeah, and I mean, Bitcoin is really hybrid between digital gold for the people who want to have like a sort of
Yes. Yeah.
hedge against debasement and inflation, but also it's also some people also see it as a risk asset. So when all the risk assets are surging, Bitcoin is one of the most reflexive asset when every risk is surging, basically. And also, Bitcoin is really, really sensible to liquidity moves and what central banks are doing all over the world. Yeah, those are those three dynamics basically for Bitcoin.
I would like to combine now all your knowledge from the past and make a general question. And then I would like in the last 15 minutes more understand also your trading strategy in detail. But before I ask about the trading strategy, you said you're an environmental engineer. And so my question is, Bitcoin is extremely it needs a lot of energies because of the, how is it called? Proof of work, proof of work.
Exactly.
It uses a lot of energies. And we have an energy problem in 2026 because energy is used also for the whole AI and the data centers that are built and all the innovation that we see in the area of AI. It seems like energy is the biggest problem that we have today. Is this a problem for cryptos?
So I don't think it's a problem. And actually, I've had like this sort of debate about like energy consumption for Bitcoin a lot of times. And myself, I actually think that this is a good thing. So as I said, like Bitcoin is proof of work and consume a lot of energy to basically be sure that the network is working fine. And Ethereum, which is like the second biggest crypto, used to be proof of work, but switched to an proof of stake, which basically is not free, but very, very like doesn't consume a lot of energy. Exactly as you said, like for the energy consumption. And both are valid in my opinion, but the fact that Bitcoin doesn't switch and keep this algorithm and keep the proof of work mechanism for me has a lot of value because it translates in our world that it translates to energy generation would mean that you make money. Okay, and all over the world, anywhere in the world, you don't care about the type of energy. You also don't care when you are consuming this, generating the energy. Okay, meaning that like the Bitcoin mining could be a sort of battery to take the excess of energy sometime, or to shut down and start again later on. And all of this have a lot of value. So for myself, I'm in France. Okay, I'm in France. We do have like most of the mix is nuclear power. And nuclear power, you have like a lot of plants, and they generate a flat number of energy. Okay, changing the energy output from the centrals take a lot of times. Okay, there is like a lot of inertia within nuclear power, meaning that they always create for the maximum energy needed during the day. Okay, so sometimes around late during the day, basically when a lot of people are at home. But most of the day, you generate too much energy which are not used. Okay, and at this point, you could like just turn on like a Bitcoin miners absorb this energy, And if you do it, you know that you will have a return on investment, easy to know, like easy to plan because Bitcoin has value. Okay, so if you generate some Bitcoins, you know that it will be worth that much, etc. So basically, Bitcoin, if you have miners, you can switch on when you need it and switch off when there is more need of the energy you generated. Then it's just like a battery which absorbs the excess of energy. So this excess of energy is already produced. Okay, it was wasted before, and now it can be used for Bitcoin. And then you also have the possibility to create a lot of renewable energy project all over the world because you know how to do a return of you now have a return on investment which is kind of assured. You do know that if the energy you produce in whatever region in the world where you create this project, okay, if there is no need of the energy you produce, you know that you can at least mine some Bitcoin, which give you like the assurance of a return on investment, which in turn make the renewable energy sectors be more willing to invest and create more either solar, wind, or hydro projects. And basically, since I've entered in 2017 for Bitcoin, the mix of energy, of renewable energy on Bitcoin has really, really increased. And now it's about like more than 50%, about 60% of the mining on Bitcoin is renewable energies, basically.
Oh, wow, that's amazing. By the way, I heard also there is now new data centers for AI that can switch. So if the data center is not used for AI, the switching can mine. And so there is like a dual system where they can do two different things, these data centers.
Yeah.
Very interesting. I think Irene is a company, a public company, for example, that does this. But I will go now back. We actually don't have so much time anymore, only 10 minutes. I want to understand now your trading strategy. So when I evaluate the trading strategy, I always ask 5 questions. So I will ask you those 5 questions, and that creates the trading strategy. The first thing is, what do you trade? But this you already answered. You said Bitcoin, Solana, and Ethereum.
Yeah, and mainly Bitcoin. Let's be honest. Yeah.
Okay. So this is what do you trade? By the way, there's 5 questions. There are also what. The second one is how much. How much do you risk? Trade.
Yeah, so it really depends. Usually I try to have like 1 to 2% of portfolio on the stop loss. Sometimes I do increase my risk depending of how sure I am about the setup, basically.
Okay.
So
But
yeah.
in general, between 1 and 2%.
No.
You mentioned the setup. So this is already the third question. So what is the setup? How do you enter? And then based on this entry, when do you use 1%? When do you use 2% or even more? Like you mentioned Wyckoff, you mentioned, right?
Yeah. So basically I use Wyckoff and Elliott Wave, but those are not my main. Let's take my main trading style is price action. Okay, I do add Wyckoff and Elliott Waves to understand the more higher time frame on Bitcoin and basically where do I think we are within the cycles. So more like a high time frame understanding of where Bitcoin is. And then I use price action to enter just trades. But because of the high time frame understanding I do have, I know if price is overextended to the downside or to the upside sometimes. And those are the most likely areas where I want to increase risk, basically. And then
I don't understand. Sorry. So you're looking at a trend. I assume we have an uptrend. We go into a correction. You trade out of a correction, or you trade when there is a breakout?
No, so my main let's say pattern, it's not really a pattern. I love to trade especially on Bitcoin or swing failure pattern, which are basically false breakouts, meaning that price is trying to continue the trend and it goes above like previous high and then get rejected. Those basically happen during distribution or during accumulation on Wyckoff. Okay, it's like similar. Wyckoff, it's like a spring, for example. It's called differently, but the idea is the same. It's like price want to continue the trend, but get rejected at a very at an important area, let's say.
Okay.
And if I expect an area to be important before that could reject or not, okay, and that it could be like the end of a trend, those are the area where I want to short, for example, and the opposite too long. And after so those are like the sort of high time frame ideas. And then to enter the trade, I'm going on the smaller time frame and I'm using price action. And when, for example, I do have my false breakout or my string failure pattern, then I know that I can enter. And if it's at an important area for myself, I can increase risk or not. Yeah.
Okay. So what do you like? Bullish and bearish engulfing? Or what is the pattern? I mean, Wyckoff is false breakouts, right? You have a
Yeah.
and so
Really,
by the way, did you have a session with Stan once together?
yeah, we do have a session with Stan on Mondays, like Europe Open.
Because he is trading a lot of Wyckoff.
Yeah, exactly. And he basically was expecting, as myself, a sort of correction on S&P and Nasdaq, and as soon we were talking about it like last weeks, and right now we may have this sort of start of correction, and it's looking like a sort of wake-up distribution because we took like 2 months ago all-time high or something, and then we took like we were just above, and then we got a rejection. So yeah, very. We talked about it on stream on at 9 a.m. Paris time on Monday.
Okay, so for the viewers who are interested in learning more about Wyckoff, this is definitely a session you should join. There's 2 experts on this matter. I love it. I love it. So you're looking at false breakouts, and then you go against the trend that was before after the false breakout. That's
Yeah,
your
exactly.
entry point.
Yeah, so those are the best. So sometimes I make other trades on Bitcoins. Of course, it's not my only trade I do, but this is the most the one that works the best for me because this is a trade where you do have your invalidation in that close, and you're sure. I mean, for myself, I'm sure that the stop loss I use is very good because it's already a false breakout. So the price tried to go there. It was rejected. It took all the liquidity around here to all the stops of people who were already in a trade. And then the price reversed. So for myself, price shouldn't really revisit this area, or I'm wrong, which is fine. I mean, I'm wrong sometimes. But it also means that I do have my invalidation kind of close, and really the invalidation means that I'm wrong. So for myself, I'm okay with that.
Okay. So, and then you use Wyckoff. That was the 4th question. How do you enter? How do you exit?
Yeah. So the exit is different. Exit or so if this is why sometimes I take more risk because Bitcoin is and crypto overall are very cyclical, and sometimes the cycles last like several years. So if you are at one of the junction of the 4-year cycle, sometimes you can expect like even 1 year of a trend. It can be a downtrend or an uptrend. So really for Bitcoin, usually I always try to know where I think we are on the cycle for Bitcoin, and based on this, I choose to hold for a long time or not my trade. And basically, based on this, I try to choose targets which looks achievable within this time.
So you look in the bigger time frame actually for the take
Yeah.
profit.
Exactly. Yeah, especially on Bitcoin because it's very cyclical. So, for example, Bitcoin had a correction since October. So, for the people who looked at the 4-year cycle on Bitcoin, October should have been the area of like the top of a 4-year cycle. Of course, if you still believe it's working or not. And basically, the bear markets or the bearish trends for Bitcoin usually last about 1 year, so not always, but usually. And where we are currently are right now, so a few months after, let's say 3 months, is usually where you do have like the sort of first bound within the downtrend. This is why I sort of expect like a sort of ABC move to retest 100K each on Bitcoin. And but as far as I'm concerned, it's just like a bearish retest, and it's not like the start of a new bullish move. Until I'm proven otherwise, I do have like my invalidation, of course, for my narratives. I always have like areas where if price goes above there, then I'm wrong on my main ID. But for now, I treat it as like previous Bitcoin cycles, and I assume that this is like a bounce within the downtrend. That's why I'm long for now, but I'm willing to cut my long if I'm wrong because I expect it to like the downtrend to the Fed continue
You
for
expect that we
at
see a
least
new
2 months.
low.
Yeah, exactly. Like basically, my main scenario for now for Bitcoin is that we are in a sort of ABC corrective move to about 98 to 104K, but I expect a rejection in this area, which would make a new low. And I would be wrong if Bitcoin succeed to break and close above 108 to 110. So my invalidation is not that far from my shorting area, but let's say. And I would be wrong on my ID there of being bearish. And actually, I would switch bullish, like very bullish, if Bitcoin succeed to go above 110, let's say.
Amazing. There would be a fifth question about a trading strategy. How do you enter and exit? But I think we don't have time for it anymore. But you mentioned it that you sometimes use a couple of entries. So you're adding up to your position or so, but you can say this only in one word, like in one sentence, because we're actually at the end already.
Yeah, so I'm waiting basically for the swing failure pattern to happen, and then I market enter and I put my stop loss below the swing failure pattern, basically.
Okay, amazing. Wow, Benjamin, this went so fast. I feel like I could easily ask you another hour of questions. It was amazing. I see a lot of comments here. I'm sorry that we couldn't answer all the comments. But Benjamin, it was really, really nice to have you. Thank you so much. Thanks to all the viewers and all the comments. And I hope to see you soon again.
Yeah, it was a pleasure. Thanks.
Bye-bye.